Welcome back to Dukascopy TV. I'm Elaine Stenson and I'm joined in the studio now by Eva Zaki, who has 15 years of financial advice experience and also has her own blog, ourexchange.net. She's joining me now to look at new currencies. Eva, you're very welcome to the studio.
Hello, thank you for having me, Elaine.
No problem. So by new currencies, we mean e-currencies and social currencies, and they've been hitting the headlines recently because of Bitcoin. What is at stake here regarding new currencies, and what are the challenges that we're facing also?
First, what do we mean when we say new currencies? There are three broad categories. Cryptocurrencies, also known as electronic currencies, loyalty currencies, and social currencies. For example, cryptocurrencies include bitcoins, Facebook credits, or Second Life's Linden dollars. Loyalty currencies are the frequent flyers miles, any system that gives you points, rewards, vouchers, and social currencies include, for example, the Brixton pound in Britain, Sol Violet in France, or Ithaca hours in the US. What all three categories have in common is that they are non-official currencies. They are used by communities or groups of people or within corporate networks. They are not legal tender, but they are not illegal either. They exist within this gray area that is only starting to be regulated. What is at stake here? I see three digital revolutions. A revolution in currency technology, a revolution in payment systems, and a revolution in methods of payment. The currency revolution means that you can today create fully fledged online monetary systems. The payment revolution allows to disintermediate transactions. So, for example, I can transact with you directly without going through a central bank. It's called peer-to-peer transaction. And the method of payment revolution is not specific to new currencies. It's what allows us today to pay with a phone application, wireless, hands-free, etc. But what is really at stake in new currencies is this peer-to-peer market. So this new complementary field created by new currencies can absorb part of the traffic generated by the mainstream economy and channel it to this peer-to-peer market that has barter features.
But Eva, are these currencies actually legal? That's what a lot of people are really wanting to know.
Yes. Well, actually, they are neither explicitly legal nor illegal. They are mostly unregulated. And as we speak, the OECD, the FATF, the EU, and mostly any country in the world is drafting new law on new currencies. The first prohibition relates to money creation. Money creation is essential. It's normally a monopoly of the central bank to create coins and banknotes. But coins and banknotes are only a fraction of the total money supply. Scriptural money is the biggest part, and you find very few legal prescriptions on scriptural money. That's why cryptocurrencies can exist. What is regulated, though, is the activity itself: payment, credit, forex trading. That's why we often hear that the Bitcoin trading platform has been shut down. On the other hand, loyalty currencies are legal only because they remain within a closed user group. So are social currencies that are issued on the basis of a bank deposit in official currency. Anything else is not explicitly legal because there is another prohibition relating to taxation. Of course, barter-like transactions are also subject to income tax and VAT. So any new currency that circulates among either private or B2B exchange platforms is supposed to report to the authorities. But in summary, you could say that nowadays new currencies are enjoying all the benefits of the digital revolution and all the freedoms allowed by law to scriptural money, whilst being emancipated from the banking system. But as we know, this situation will not last.
And Eva, the adopters often associate new currencies with increased transparency and democracy. Why is this?
Well, new currencies being complementary to official monetary system, they could be thought of as a diversification vehicle or a hedge against risks in traditional assets. That is, of course, when their own rules of the game are perfectly clear and stable. But the problem with legal money is that it has become so over-adapted to the needs of finance that it drifted very much away from the needs of the real economy. Actually, legal tender is perfectly adapted to finance, global trade, and central bank reserves. But for the rest of it, we very much need monetary innovation. It can create new fields of activity, it can shake off aging economies, and it can enlarge the trading universe. really what I want to say is that the digital revolution is not just about technology. Technology has always been there. Money has been virtual for the last 50 years. It is not backed by any physical asset. Cash is losing ground. We have used chips and smart cards and wire transfers. Now we use wireless, near-field communication, cloud, Bluetooth, e-mobile wallets. I mean, it's not only about currency technology and payment technology. Obviously, it's about a quantum leap in ideology. You see, the money supply needs to irrigate many more economic areas than it actually does. And for this purpose, we must make a clever use of policy instruments instead of just regulating. My conclusion is that I hope that regulators won't miss the extremely helpful potential of new currencies in moderating the adverse effects of economic downturns.
Okay, Eva, quantum leap in ideology. It's a good way of looking at it.
Yes.
Thanks for coming in today.
Thank you very much.
And that's all we have time for now, but do check back later for further updates and interviews from the TV team. Bye for now.